Hey traders, welcome back to this week's weekly Forex forecast. Obviously, at the end of this week, we did have the Iran-Israel situation escalating, and this is going to have an effect on markets, likely going to be bearish for equities. However, in the very near term, we are probably going to need to see crude oil going up quite a bit further before we start to see any major response from the US dollar. So as we see going through in today's video, I do still favor US dollar shorts going into next week. We also have FOMC on the Wednesday. In fact, we've got 4 interest rate decisions next week, so it's a huge week for interest rate decisions. But coming up on Wednesday, the big one out of the US is, of course, FOMC. And unless or until we get some sustained moves to the upside in crude oil over the next few weeks, we are unlikely to see any major rally in the dollar. So crude oil needs to go much higher before the dollar starts to respond. However, just bear in mind, after FOMC next week on Wednesday, it may be the case that because of what's happening with Iran and Israel, the Federal Reserve come out and disappoint the doves, or they come out with a more hawkish press conference to say that they may need to hold rates higher for longer if we are going to continue to see crude oil go up if the Iran-Israel situation escalates. So what that means is, to summarize, I do still like dollar shorts. I do think crude oil is going to go up, and I do want to be long crude oil only coming into this week for the first time in a while. And I also think that dollar shorts are going to be best looked at before FOMC, because after FOMC, we could see a hawkish kind of higher for longer press conference from the Federal Reserve. And on the Thursday, we have a US bank holiday, which is likely to be dead. So I would primarily be looking for opportunities in euro dollar before Wednesday. And what I want to see is, I want to see euro dollar coming down, taking out the lower bound here at the 1.14120. As it does this, we enter the buy zone between these two levels. This is where we turn oversold during the week. And if we can get this set up before Wednesday, if we get this on kind of maybe Monday or Tuesday, this is going to be a really good opportunity to look for the reversal before Wednesday's FOMC. Because very often when you have an interest rate decision and a market breaches the upper or lower bound before the actual interest rate decision, it usually, with a high degree of probability, reverses back inside the range. So that's the setup I'm going to be specifically looking for next week in euro dollar. If we end up down below the 1.1277, this is where we become extremely oversold during the week in a market I'm still, for now, looking to be long. And if I'm not already long, this is a great initial position. In fact, last week, I did short a market nicely from the second upper bound for the first time, euro pound. Euro pound was kind of a bullish euro and a kind of bullish to neutral pound. And last week it went all the way to its second upper bound. I didn't short it the first upper bound. I shorted it the second upper bound, and what happened to euro pound last week from the second upper bound, really nice reversal, successful trade with GMT members last week. So we've still got these conditions where we're kind of having to grind out the wins, but with what's happening with Iran and Israel, we're probably now going to see volatility coming back into the markets. So those are the two primary setups I'm going to be looking for before the Federal Reserve. Breakout trading to the upside, probably not a great opportunity next week. Why? Because before FOMC on Wednesday, this market is going to struggle for breakout trading. It can work, but the probabilities are low. And then as soon as we have FOMC, we're going to go into a US bank holiday on the Thursday. So breakout trading probably going to struggle on the Thursday as well. So primarily, these are the two setups I'm going to be looking at in euro dollar next week. Okay, so moving on to the portfolio selection, and still at the top of the list, really ever since we had that big fiscal catalyst out of Germany talking about increasing its military spending. The euro, the EU majors have actually been outperformers, and we've been looking to the long side primarily. And going into this week, once again, the euro is still my favorite long theme. I did short it last week against the pound only because it went all the way to its second upper bound. And, even kind of two strong currencies, if they go to second upper bounds in a week, the odds of a reversing are extremely high, 90, 95%. That's what they're priced at going into the week if the market is to breach, become extremely overbought or oversold. So that's why I shorted that last week with GMT members, because, they were both kind of bullish currencies. Yes, the euro was more bullish and I really wanted to be short, but it was so extended last week to the upside that it had to pause, had to correct. So I do still favor euro to the long side, followed by the Swiss franc. And then third, we have the Canadian dollar. Now that also makes a lot of sense, not just quantitatively, but in the context of what we're looking at with Iran and Israel. Why? Because this is a huge bullish catalyst for crude oil. Yields should be going higher, in the US. As crude oil goes up, bond yields in the US tend to go up as well. And as that happens, as the yield on essentially, the US dollar or dollar assets goes up, demand comes into the dollar, so it's bullish for the dollar. However, as I said at the beginning of the video, the dollar needs a bit more time. And certainly leading up to FOMC, I still would prefer to be looking to the short side until the quantitative data actually changes. So the top three are pretty straightforward going into next week. Euro, franc, and CAD to the upside is what I'm primarily focused on. Now, out of the others, we do have the BOJ on Tuesday, and we have the Bank of England on Thursday. So those two pairs are kind of in the middle as well. And, Japanese yen shorts, well, if we're going to get equity selling off in the US, which is a probability, even though it's not guaranteed, it looks unlikely that the Iran-Israel situation is going to de-escalate anytime soon. So as that pushes crude oil up, yields go up in the US. This is negative for the stock market in the US. So if we're going to see that, we could see a flight to safety or money coming into the yen, even though the yen is kind of a short. So for that reason, plus the BOJ, I don't think Japanese yen shorts are top of my list next week. That leaves the US dollar. So that is something I'm going to be looking at, heading into next week. Perhaps from Wednesday onwards, I might be slightly less interested in selling the dollar, but I am going to be looking at dollar shorts at least up until FOMC kind of Wednesday evening. So at least the first 3 days of the week, Thursday being a bank holiday anyway. So we pretty much have 4 trading days next week. So for most of those, Monday through to Wednesday, I'll be looking for US dollar shorts. Alongside that, I'm going to be looking for Aussie dollar shorts and also New Zealand dollar shorts. So we also have the SMB on Thursday, but again, it's a US bank holiday as well. So I would rather be in and out of the Swiss franc pairs if possible by Thursday. So primarily most of these opportunities I would like to get, between kind of Monday and the end of Wednesday going into next week. So coming into this week then, I'm going to be primarily looking at euro dollar to the upside, US dollar franc to the downside, US dollar CAD to the downside. Also going to be looking at euro Aussie to the upside, Aussie franc to the downside, Aussie CAD to the downside, and finally going to be primarily focused on Euro New Zealand to the upside, New Zealand franc to the downside, and New Zealand CAD to the downside. And those are the markets top of my watch list going into next week and the markets we're going to look at in today's video. Okay, so kicking off the watch list as always with crude oil. Now I've zoomed out onto the daily chart here because I want to just take stock of the bigger picture here. We've been tracking this kind of descending triangle pattern, has a price target to the downside of about $45. And last week, we get this unexpected catalyst. So unexpected being something that's not, in the economic calendar, like an interest rate decision, which can cause big directional moves, etc. So unexpected catalysts are just a part of trading. In fact, that's what risk management is for, because when you have expected catalysts, you can just avoid them. Unexpected catalysts, you don't know when they're going to come, so your risk management deals with unexpected catalysts. And last week, in fact, that's what I had to do last week, because this was the only losing trade I had last week. I didn't take too many trades last week, but this was a trade I took. I shorted it, been looking for the downside, that $45 price target. So every time it pushes up, I'm looking to short it. And then last week, it explodes higher. So it was just a standard loss, nothing crazy on this, because I exited it before the attack, because they started to remove diplomats first, and that was the warning essentially beforehand. Okay, look, we need to, shorts are risky. So it was a winning week last week, but this was a losing trade I had. So now I'm flipping my bias, right? Because we've seen this major catalyst. We're essentially now looking at a busted pattern. In other words, a failed breakout of this descending triangle pattern. So as this kind of pushes higher, is there more room for crude oil to go up in terms of catalyst? Definitely. I mean, it seems unlikely there's going to be a de-escalation. If anything, the situation looks like it could be escalating. Because of that, this can push the price of crude oil up higher. Iran can take steps like closing the Strait of Hormuz, which is going to push crude oil even higher and, interfere with shipping, etc., etc. So clearly crude oil shorts going forwards are risky until there's a resolution to this situation between Iran and Israel, and it doesn't look like there's going to be one for at least a couple of weeks, if not, potentially a couple of years if it escalates like the Russia-Ukraine war did. But at least for a couple of weeks, shorts on crude oil are risky. So going into next week, I'm going to be looking at this as a broken pattern, focusing only on bullish setups. So dropping down to the 4-hour time frame, what's interesting about this is the underside of the descending triangle pattern, which we got the initial breakout and now has failed, is sitting just underneath the lower bound at the 68.99. So if we pull back next week, I'm going to be looking for a pullback in crude oil, for the market to breach the 68.99, and what would be great is a test of the overside of the bottom of the descending triangle at 67.81. This is where I'm going to be looking next week for bullish reversal patterns, double bottoms, inverse head and shoulders, dropping down to the lower time frames, looking for sellers to start to lack momentum, and then I'm going to be looking to buy as those sellers start to stall out. And I'm going to be looking for that 1 or 2 day liquidation back inside the range. This probably, if you catch this kind of reversal cleanly, this will probably be, a near-term bottom for the next few weeks. But I'm personally looking, as an objective to capture 1 to 2 days worth of movement in these assets. So that's what I'm going to be focused on next week. If we break all the way down to the 64.80, it's unexpected that these levels are going to be taken out. They're rarely taken out. When they are taken out, it represents a very high probability of a reversal. So coming into next week, if we end up below the 64.80, this is not something I'm anticipating is going to happen, but reactively, this would be the second place I could pull the trigger on a long. And the third thing, breakout trading crude oil to the upside, probably a much better idea than trying to breakout trade a Forex market, in the lead up to FOMC next week. So any pullback towards the 68.99, if we start to break down below the moving average and then we re-break, so the moving average comes up, we come down close to it, but we don't test it and we re-break, you can look for that kind of Fibonacci or bull flag setup. Profit taking target to the upside in crude oil next week is the 77.36. I can only be a buyer of crude oil next week. I cannot short this market under any circumstances. Okay, so continuing on with the euro pairs, looking at EurAusd, you can see the rally to the upside. We started to get the euro outperform the commodity currencies. This is something you see during risk off. So if we are going to see equities in the US suffering, we could very easily see risk off flows. So what I want to do this week is to try as much as possible to look for setups that are quantitatively sound, like euro to the upside versus the Aussie, but also could benefit if we see risk off. Because if we see risk off, then the euro should be pushed higher against the Aussie, right? So I'm looking for a trade which is quantitatively sound, but also can benefit from the stock market selling off in the US. The EurAusd, high up on my list next week. So I'd like to see EurAusd come down, breach the 1.7582. This is where we become oversold during the week. And this is where I'm going to start to look for sellers to lack momentum. I'm going to be dropping down, looking for those bullish reversal patterns for a 1 or 2 day reversal back inside the range. If we end up down below the 1.7374, whether I'm long already or not, this is the second place I can pull the trigger, although I don't really expect this to be taken out next week, especially in a strong market like EurAusd. And the third thing is, do you want to look for those kind of breakout trades before FOMC? It may be difficult. Breakout trading next week in pretty much all the Forex pairs before Wednesday and even after Wednesday with the bank holiday on Thursday is probably going to be difficult. So these are the two setups I'm primarily focused on next week in EurAusd. If you are involved in any intra-week longs, the profit taking target to the upside in EurAusd next week is the 1.8000. Next is EurNzd. So again, another market which, if we do start to see stocks selling off, should also benefit, as that would be risk off supportive to the upside of EurNzd. And at the same time, quantitatively, we should be looking at this market anyway. So a good setup going into next week. This is a market I am going to be looking at high up on my watch list. I personally want to see it turn oversold during the week, which is below the 1.8960. If we can get this, then reactively, this is where I'm going to begin to start to look for bullish reversal patterns. We don't really have any significant lows until we start to get down here, but I'm going to start to look for it to make its own lows and then start to fail. And that is the setup I'm going to be looking at in real time with GMT members next week if I can get it. The 1.8731 is the second place I can pull the trigger on a long position, whether I'm long already or not, because this is where we turn extremely oversold during the week. Again, remember last week, Euro pound takes out its second upper bound, and that's my initial position. That's my first short in that pair, because initially I'm not really looking to be short that pair, but it gets so extended that it becomes a good initial position. Successful trade last week. So I don't anticipate it coming down to here, but as a plan B, reactively, if it does, I can pull the trigger down here as well. And you know, Euro New Zealand before FOMC and then a bank holiday after FOMC, I would leave the breakout trading in this market next week. Okay, so moving on to the Swiss franc pairs, starting with Aussie franc. Now, this is another market which is not only quantitatively sound for shorts next week, but it should also outperform to the downside if we do see equity starting to suffer because of the Iran-Israel situation. Now, I've zoomed out a little bit here so you can see we had the big momentum sell-off, the correction, and now we've broken somewhat of a head and shoulders. I mean, you could argue that this was the initial head and shoulders with a break. You could take the whole thing as a right shoulder if you really want, but you can see we basically this psychology of attempting new highs, failing, and now we're breaking down with momentum. If we are going to get continued risk off, you would expect this market to come down. We're breaking a major technical pattern with this kind of risk off move coming into the markets. And so I would not be surprised to see Aussie franc back down to the prior low, the major prior low, over the next month or so. If that's the case, every time this market pushes higher, I want to be a seller of it. So I'd like to see this market pulling back next week, breaching the 0.5334. That's where we enter the sell zone, and potentially even pulling back, maybe taking out some stop losses above here, trading into resistance. That would be even better. Then I'm going to be looking for a 1 or 2 day reversal back inside the range. If we end up above the 0.54127, I struggle to see how this is going to take place, especially as we just had a momentum move to the downside. But as a plan B, I could look for a potential short over here as well. So these are the two places I could look for a short next week. And the third and final thing is the breakout trade to the downside, but with FOMC on Wednesday and the bank holiday on Thursday. I think breakout trading overall next week is not a fantastic thing in Forex. Next is New Zealand franc. Again, I can either be short or do nothing. We have the same pattern with the big sell-off, the correction, and then this kind of head and shoulders failure, which is now breaking down. So I also think this pattern is probably going to resolve itself to at least this low, if not further, especially if we get continued risk off, coming into the stock market in the US. That means, once again, any push higher, I want to be a seller of this market. So I'd like to see this come back, breach the upper bound at the 0.4949. This is where we enter the sell zone next week between these two levels. And, ideally, I mean, if we came all the way up and took out the prior high, that would be perfect, because now we're in the sell zone and we've hit resistance. This would be a great place to start to look for a 1 or 2 day reversal. If it trades above the 0.5020, this market is extremely overbought during the week, and it's the second place I can look for a short, whether I'm short already or not. And the third and final thing, you could look for that breakout to the downside, but again, with FOMC next week, I don't think these are great setups. The profit target to the downside is the 0.4805. And the third franc pair is US dollar Swiss franc. What I'd like to see is this market coming up, breaching the upper bound at the 0.8208 and taking out these highs here. If it does this on Monday or Tuesday before FOMC, this is going to be a great opportunity to pull the trigger on a short, looking for this to come back inside the range before the event itself, which is quite late on Wednesday. So you essentially have pretty much all the way up to Wednesday evening to look for this reversal back inside the range. If we end up above the 0.8313, which we could do on FOMC, so because it's a dollar pair, we could end up above here because we have the interest rate decision. If that happens, let's say we get a very hawkish outcome and we see the dollar explode to the upside. I'm not saying this is going to happen, but just reactively, just wargaming a potential scenario. I may decide, look, this is too strong to jump in just here because we're going straight up. The following day, it takes this one out, and then that becomes my initial short. Makes sense? Just like exactly what happened with Euro Pound last week. So if we do trade above the 0.8313, maybe on Friday or later on in the week, that would be the second place I can pull the trigger on a short. And, you could get the kind of breakdown, an intra-week breakout post FOMC on Wednesday. However, running straight into a bank holiday on the Thursday, again, these breakout trades may struggle. So just keep that in mind next week if you're trying to break out trade between the levels next week. Okay, so wrapping up the Forex universe with the CAD pairs before we move on to gold and silver. Now, Aussie CAD to the downside is another market which is quantitatively sound for shorts, and the Aussie should underperform the Canadian dollar in risk off. They're both commodity currencies, but the Aussie dollar is more risk off than the Canadian dollar. Now, on top of that, we actually have a bullish catalyst for crude oil. So crude oil going up is supportive of the Canadian dollar through the balance of payments because it increases the demand for the Canadian dollar as oil prices go up. Because, crude oil is price inelastic. In other words, people still have to buy crude oil when the price goes up because, you can't easily substitute it if you own, a logistics company or whatever, something that you're using oil in terms of your business. So going into next week, if we do start to see, especially with crude oil going up and risk off coming in, AussieCad as a market to the downside for short opportunities is going to be a good one. So it's high up on my list. I want to see the opposite happen first. I want to see AussieCad pushing up because then I can say, look, this is a market that should overall be going down. So if we are seeing strength, that's the opportunity. Once it enters the sell zone above the 0.88897, that's the opportunity to start to look for bearish reversal patterns, looking for a 1 or 2 day reversal to the downside. If we end up, I don't expect this to happen, but just reactively, if we end up above the 0.8975, so we actually start to trade outside of the sell zone and above it, this would be the second place I could look for a short next week. And to the downside, perhaps you get that breakout trade post FOMC next week. But again, we're going straight into that kind of bank holiday from the US. And when the US has a bank holiday, all of the Forex markets tend to be slow. Profit taking target to the downside either way next week is a 0.8717. Next is New Zealand CAD, exactly the same dynamics as Aussie CAD. So in risk off, we should see the New Zealand coming down versus the CAD anyway, because the New Zealand is more risk on than the CAD. So when you get two risk on commodity currencies, they both tend to go down against safe haven assets, etc. But the New Zealand dollar tends to go down more than the CAD in risk off. Now, when you add to that the fact that the risk off catalyst is bullish crude oil, of course, this is supportive for the CAD as well. So I do like shorts in this market as well. I personally want to see it coming back up, breaching the 0.8250. That's where we enter the sell zone. And there's multiple highs here on the left that we could trade into to help push this back down and liquidate this market back to the downside. So that's what I'm going to be primarily looking for next week. If we end up, for whatever reason, above the 0.83317, it's the second place I can pull the trigger on a short because we're extremely overbought during the week. And the third and final thing is, maybe because it doesn't have a dollar in it, but I suspect all these markets will be slow before Wednesday, can look for that kind of breakout trade down to the 0.8088 profit taking target to the downside next week in New Zealand CAD. And last but not least, we have US dollar CAD. I would prefer this before Wednesday. So if I can get this kind of Monday or Tuesday, this would be great. But I want to see this market come back, breach the 1.3694. We enter the sell zone and there's a really nice high right here. If we can breach this and attempt to break through this high, this is where I'm going to be looking for a short opportunity next week in US dollar CAD for a 1 or 2 day liquidation back inside the range before FOMC. If we have FOMC and this ends up trading above the 1.3805, I can still only sell this market. I can't buy it under any circumstances next week. So if we have FOMC, maybe I sidestep the first move and we come all the way up and we turn extremely overbought during the week. I will look for a potential short, especially if we trade into this high above the 1.3805. And again, maybe after FOMC, you get the intra-week breakout, a sell-off on FOMC. But because we've got that Thursday bank holiday, it throws those kind of breakout trades both before and later on in the week kind of more into down. But the profit taking target to the downside is 1.3473. Okay, so wrapping up the video with gold and silver. Now, I can only be a buyer of both gold and silver next week, but I favor gold because if we do start to see risk off coming in, silver can suffer, but gold can go up at the same time, even as the dollar's going up. Or if we start to see concerns globally, you can see risk off going into gold as well. So gold longs, to me, are the better out of the two between gold and silver, but I will still look for silver longs as well next week. If we start to see real risk off coming in, the dollar starts to rally, then maybe just filter out the silver longs and stick with the gold longs. I've zoomed out a little bit just so we can see the overall pattern here. I do think we're coming up to the prior high. What I would like to see is if we can pull back first. Now, if we do pull back and we take out the 3352.23, we're essentially buying the dip. So it's unlikely to test this and test the upper bound next week. So we test the upper bound on a breakout trade. But if we do pull all the way back to the 3352.23, this is where I'm personally going to be looking. There's a really nice low just here. And I'm going to be looking for a failed breakout. I'm going to be looking for a 1 or 2 day reversal back inside the range. If we start to trade down below the moving average and we re-break it, this is where I think you could get that breakout trade. And again, commodities next week, crude oil to the upside, gold to the upside, silver to the upside, are probably going to be better for breakout trading than Forex. So any kind of breakout trade to the upside, the 3517.36 is the profit taking target next week in gold. And of course, you know, the second lower bound down here, 3269.67, this is where we become extremely oversold during the week. I can pull the trigger on a long position down here, but I highly doubt gold is going to be testing that level next week. And finally, we have silver. So the only caveat with silver is if we do start to see real risk off coming into equities, you could see silver suffer. So just pay attention. You know, if you start to see the stock market selling off hard, you might want to just reconsider silver longs and just stick with gold. But if the stock market is just kind of grinding lower or pushing lower or maybe not going lower at all, then silver longs are on the table. So what I'd like to see is I'd like to see silver pull back, breach the 34.55. This is where we turn oversold during the week and we enter the buy zone. There's a really nice low right here and there's another one just below it. So these lows here are where I'll be looking for sellers to get trapped if we can breach this level and pull their positions for a 1 or 2 day liquidation back inside the range. If we come down towards this level and re-break the moving average and you get this kind of just like a channel breakout like this, you can look for that bull flag setup into the upper bound here at the 38.04, profit taking target next week. And finally, if we end up below the 32.81, I don't anticipate this happening, but just as a backup plan, that would be the second place I could pull the trigger on a long position during the week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.